Okay, we will get started. Greetings and welcome to Cota Access. My name is Holly Rowland, and I'm an operating partner for Cota Capital and the host of Cota Access. Cota Capital is an SEC-registered multi-stage investment firm based in San Francisco. We're focused on US-based modern enterprise technology companies. Cota has invested in over 75 private and 25 public technology companies since its inception in 2015. We invest in the fields of infrastructure, workflow automation and applications, fintech, and health tech. Cota Access brings together founders, thought leaders, and leading executives to explore a variety of business and technology trends and topics that fundamentally impact our society. Today, Kevin Jacques of Cota Capital will host a discussion with fintech industry movers and shakers about the future of bank accounts and credit cards. Take it away, Kevin.
Thanks, Holly. A warm welcome to our audience and an even bigger welcome and thank you to our panelists. I'm Kevin. I'm a partner at Cota Capital. I focus on fintech investments. And the premise of our panel today is that consumer behavior and tastes in both banking and payments are evolving very rapidly today. Like many facets of our lives, the disruption of COVID has forced a huge shift to digital. And no market has seen more change than banking and payments. Over the past 18 months, things like contactless payments, tap to pay, buy now, pay later, and neobanks have seen what might have been years of adoption compressed into just 12 or 18 short months. This shift to digital is increasing the level of competition for our banking deposit and payment mindshare. Features that are offered in bank accounts and capabilities supported by payment networks are rapidly evolving. We are fortunate today to have assembled a panel of senior leaders from some of the more significant and innovative companies in payments and banking to share the innovations, the exciting features, and new things that their organizations will be releasing over the next many months. So let me introduce our panelists. We forward one more. We are fortunate today to have Haroon Mokhtarzada, the CEO and founder of Truebill. Truebill is a money management app that empowers millions of consumers to save more, spend less, and take control of their financial lives. Their average user saves over $500 in the first year. Haroon, please take a few minutes and tell us more about yourself and Truebill.
Great to be here, and thank you for inviting us. Truebill is an app on iOS and Android that millions of people use to get a complete all-in-one view of their finances. We started with solving the problem of subscription management. As we've seen the subscription economy explode, it's become increasingly more and more difficult to figure out what people are paying for and when, and how to manage them, how to cancel the ones you're not paying for. We solved that problem dead. We automatically detect everyone's subscriptions. We can cancel several thousand different services. Our team can do that for our customers, and we've saved them over $100 million since inception. But we expanded from that to really removing blind spots from people's financial lives. And if you think about what's happened, you went from a cash world to a world where you're banking with different banks, different cards. And so you've just got these transactions all over the place, and it's very hard to actually know where your money is going and to see that in one place. And so Truebill is there to basically bring it all back together for you in one spot and kind of be that record of truth for your financial life and your financial health.
Thanks, Haroon. Next, we have Brandon Dewitt, the CTO and co-founder of MX, formerly Money Desktop. MX is a fintech enabler that helps banks deliver powerful money experiences by connecting accounts and banking platforms to other technology systems. They help the bank surface analytical insights and deliver personalized experiences to their customers. They serve over 2,000 banks and credit unions who collectively have 50 million accounts.
Thanks for having us, Kevin. And we have been around for just over a decade now and been building MX. And as you said, we partner with fintechs, banks, and credit unions, but serve quite a few banks and credit unions somewhat on the data and aggregation side and connecting the new world of open banking, but also on the data side when it comes to enhancing data, gaining insights through that data and understanding that data so it can be used in the benefit of the consumer and hopefully the benefit of organizations that are trying to serve consumers at scale. We, are a fast-growing organization, and over the last year have grown from more than 300 employees to, at the end of this month, I think we're forecasting about 700 as a result of what's happened with the pandemic and the digital transformation that's taken place across the industry. Thanks for having us.
Thanks, Brandon. Our next panelist is Amy Dawson. In the last few months, Amy has taken over as the Global Head of Innovation. Oh, I think we advanced a few too many slides. Amy is the Global Head of Innovation for Visa, the world's largest payment networks. Amy and her team help support innovation at 16,000 partner banks around the world that Visa works with. Those banks have issued over 3.5 billion Visa cards that are accepted at 65 million merchants worldwide.
Hi, Kevin. Thank you for having me. Yeah, I guess I'm the OG of fintech on the panel, being from Visa. And yes, I feel like I have one of the best jobs at the company. We get to work with all of our ecosystem partners to build the future. One of the things that we're really excited about is, as we look ahead with learnings from this past year, we really see the importance of money and how it fits into people's lives, into companies' lives as we went through the pandemic. And as we move forward, Visa's really focused on how do we uplift everyone everywhere from a global perspective. Thank you for having me.
Thanks, Amy. And finally, Joe Eng, a good friend and former colleague. Joe is the SVP and Head of Business Innovation at Wells Fargo. Wells is one of the 3 largest banks in America with over 70 million account holders and $1.9 trillion in AUM and deposits. Welcome, Joe.
Thanks, Kevin. Again, really fortunate to be here and share our ideas. My team is responsible at Wells Fargo to identify market trends and dynamics and help our lines of businesses to evolve their business models and stay relevant with our customers. My scope is across all of Wells Fargo. We surface partnerships, innovation, transformation ideas, and potentially incubate new businesses and offerings. So it's glad to be here.
Thanks, Joe. So before we start a series of questions with the panelists, we wanted to provide a little bit of information to kind of set a backdrop about the magnitude of the change that's going on. And starting with banking, we can see that over the last 3 years, neobanks, digital-only competitors in banking, have gone from a relatively insignificant portion of the market to, as of mid-2020, about 18% of all accounts being opened in the United States were being opened at these digital-first challenger banks. Big banks like Wells that have the budget and the resources and very talented people like Joe to invest in digital innovation were also keeping pace and gaining share. The regional banks in the long tail, I think, feeling the competitive pressure of the shift to digital in the market. We picked a sample of 7 leading US-focused neobanks on the right-hand side. As of the middle of last year, those banks had amassed a combined, I think it's roughly 31 million account holders. Not yet quite challenging the scale of Wells or MX, but not a bad achievement over 3 years as well. Let's advance one. At the same time, change is happening in payments. Buy now, pay later usage is growing. And again, during the pandemic, some pretty significant shifts. The graphs here on the left-hand side are from a survey, a set of surveys that were done in mid-2020 and then March of this year, so about 9 months apart. And across a very broad spectrum of age demographics, more and more Americans are choosing to use buy now, pay later. On the right-hand side, a number of reasons. Some are not able to get approved for credit cards or don't have even bank accounts. Others are making a choice for reasons, to prevent a credit check or avoid paying interest. They're choosing buy now, pay later over card. So setting the context, our behavior, the options for consumers are increasing. Our behavior is changing. Panelists, let's shift to the first question. Are these changes in behavior in both banking and payments, are these short-term shifts, or do we think these are long-term changes? And if you have insights, why do we think some of these behaviors are changing? Panelists, don't all raise your hands at once. I'll start calling on people.
I'll go first.
Thank you,
Kevin.
Brandon.
I think that there's been a lot of waves of technological innovation that have happened. And typically, the financial industry tends to be behind those waves because we fall usually into a regulated space. And so when a wave of new technology comes along, it takes time for the regulation and guidance to be provided around that. And so I think what we're seeing now, buy now, pay later, is a good example of that. The manifestation of neobanks is a good example of it. Is what you're starting to see is the digital connectedness that happened with the internet in our world over really the last 2 decades. There's finally been good guidance and good adoption of those platforms and the connectivity of that technology that has allowed these new ideas to now manifest on the platform that is this connectedness. And so there's new sources of data, there's availability and access to that data to where now computers can do a huge amount of work that humans would have had to do previously. And so scaling, maybe a buy now, pay later system, or scaling a digital only bank didn't make sense 10 years ago, because it would cost you too much in call center costs. It would cost you too much in the human capital that it took. But since we've had this rapid acceleration and innovation in technology, this rapid connectivity that's gone about, throughout the world, all of a sudden it is an efficient channel to move through. And so to the question of, will this be sustained? I think not only will it be sustained, but it will also continue to disrupt even itself as we continue to iterate on top of this massive connectivity that has now manifest in our industry.
You could piggyback on that a bit and say that not only has the regulatory environment shifted, but the technology environment has fundamentally, the barrier to entry has been fundamentally lowered. And we see this over and over again in many different industries that, when something, to launch a bank, you used to need a charter or something, and then there would be hundreds of millions of dollars of investment to go launch a bank. Today, you can do it with 2 engineers and maybe 3 months, you could probably get a challenger bank online. And that's just a fundamental change, and that's not going anywhere. It's only going to get easier. And so what we're then going to see is that people will they'll innovate on the interfaces themselves, and the interface will become more digital than physical. And so the branch location will matter less, the user experience will matter more. And we will, I think, continue to see people who just expect to get everything done on their phones to move in that direction.
So 2 votes for, we now have regulatory clarity. There's been a lot of advances in enabling technologies. Essentially votes, these are durable changes. They're here to stay. And in fact, innovation will be built on top of the innovation we're seeing. Joe, Amy, similar perspective or any counterpoints?
I think
I have 2. Go ahead, Joe.
Thanks, Amy. I would build off what Haroon and Brandon was saying as well, and then I'll add another factor of why the counter, if you will, from a more traditional view. I would say the confluence of and the convergence of all these technologies will continue to build as our panelists have talked about. I think new technologies are actually starting to provide a view of the future that a separate infrastructure of banking can actually be stood up, if you will, or people don't need to use traditional rails and traditional infrastructure. So I think you're starting to see how people can actually piecemeal an ecosystem for themselves that would fit their personal and financial or small business lives. So I think that's another factor for sure. I believe it will be durable. I think the counter where I think there's still debate of that is the margins, right? Or the profitability for these traditionally, though things are changing. Traditionally, these neobanks are really focused in one specific area of banking or of financial services. The margins and profitability are in question, and a lot of times the acquisitions through a lot of money spent on marketing and et cetera. So I think there is some questions, at least from having interacted with some of our other partners, of how sustainable is the money is going to come. And therefore, I think one of the other dynamics that we're also tracking is that a lot of the traditional fintechs are also expanding their offerings to get more share of wallet, if you will. So I think the four of it is that there is technology that is pushing this forward. The counter is that the margins and the economics is still somewhat being figured out.
Fair, Joe. The theory of the case is that a neobank should have a very streamlined cost structure. I think you could have a learned debate. Revolut's numbers, say the jury might still be out, for example. Fair summarization? Yep.
Exactly, yeah, thanks.
Amy.
Yeah, I'll just add on because a lot of the others here hit on some of the points that I agree with and observation. So two things. One is, as a network and our role in there, like we are here to support all like the endpoints on like the credentials that are given and the acceptance points that are happening there. So we're really seeing a role that we play of enablement across like how these fintechs grow. And then like specifically, for example, on like the buy now, pay later, I think there's great points around like the technology that allows the entrance that happen, but there's also just like evolution of the mindset of how people work with their money. So as we were working on Visa's offering within buy now, pay later, which is connecting our issuers and our acceptance points together in terms of enabling that as well. One of the key insights is around people just want easier decision-making at the point of sale. So beyond solving, of leveraging technologies or getting a startup in there, just truly solving for people's needs that like, it's easier to make a decision when you're trying to buy a TV of like, I know the amount of payments I'm going to have over 4, 6, 12 months versus a lump sum and trying to guess like how it fits into your ongoing budget. And so beyond the technology needs, I think one of the evolutions that's really happening that is driving a lot of the growth is designing and delivering based on really understanding your target segments needs and like just like hitting all cylinders on it and then expanding within the other areas within that target segment may want.
And Amy, that segmentation, that assessment of your buyer's needs, I guess that's something merchant by merchant would be how that analysis would need to be conducted. Is that right?
I almost think of it as like combination of individuals' mindsets and what they're solving for. One of the things that we're seeing coming out of the pandemic is, if people have attended a Visa payment forum that happened recently, I spoke a lot about everybody's been in the same storm, but people are coming out in different boats. So there are people who are coming out as like cruisers, their income hasn't been impacted. Maybe they've saved money, they've been able to drive investments. Then there's another segment that's around paddlers that like they have been impacted. They're kind of dipping into savings, trying to like get by. And then there's treaders, maybe call them drowners, that are really hit deep. They're way behind in terms of where they were pre-pandemic. And so what those individuals, and you could probably talk about those from a business perspective as well, in terms of like, restaurants versus streaming services, like what you design, develop, and deliver for those customer bases is very different in terms of what's going to drive adoption and usage.
Interesting. Well, panelists, I think the majority point of view was that these are durable changes and we expect more change, more innovation over time. what are one or two new capabilities or new features that each of your organizations is, supporting, launching, or accelerating into your partner base over the next 12 months to react to this kind of heightened level of digital competition and shifting consumer needs and tastes?
I'll go first. We're sort of rounding out the Truebill offering by launching like full net worth tracking. So you have transactions and all of the meaning that comes out of all of your spend. But then there's the second question of, okay, what are your assets and what are your debt, and what does that story look like? So that's something we're working on, and then that sort of dovetails with an autopilot that can kind of look at your cash flow and determine how much can be safely moved towards savings, towards paying down your debt, or towards investing, and helping users kind of make those decisions for themselves rather than having the users do that themselves. And then, I'd be remiss to say we were not looking at a card program. I think that, as I said, the barriers to entry have changed, and we were sort of waiting until the technology got to a point where we believed we could, not just have like a Me Too card, but a really differentiated card that really drives value for users. And it's something that we're looking forward to releasing in the next 12 months.
Thanks, Haroon.
I'll go next, Kevin. Is in that I feel like as we talked about the big trends that were happening around us, right? One of the things that I could probably summarize in my own head is that the traditional view of banking, where a certain entity owns vertically owned, and an entity that owns the vertically integrated customer, the front end and the back end, that model is getting disrupted in the sense that the front end players, the people who are driving the experiences, and the people who are in the back end driving the actual transaction. And I feel what Haroon just talked about around offering potentially a credit card, of increasing kind of the front end the experiences and better traction with personal money management. We at Wells are looking at that very trend of leveraging our API gateway, which we launched in 2016-17. We now have about 1.5 billion API calls with 30 plus use cases. So that is clearly something that we would like to accelerate over the next months. We also just launched a new active cash card, which is kind of best in class for cashback credit card with 2% no annual fee across all domains of spend. We're also looking at digital cash, enabling and testing and experimenting how we could complete internal book transfers for cross-border payments within our global network. And so those are things that we're constantly trying to test, one, to lower our cost efficiency, as well as drive higher value propositions for our customers as that key trend of bifurcating the front and the back end continues to happen.
Joe, I'm familiar with the active cash cards. In this past week, I became a user myself, so a great offering. But maybe to pull on your gateway offering a little bit, is this something that, for example, Haroon and Truebill could leverage? To provide an account with, would they be providing their services to your user base, or would they be accessing, let's say, Wells infrastructure, account infrastructure, to serve as a store of value to provide, a Truebill branded account? How does that gateway work?
Yeah, I think it depends on how. I would say it's a little bit of both. I would say the true API gateway that we have right now are more capabilities rather than a full-fledged product offering that Haroon, for example, could white label. I think that's a direction that we would like to explore. But right now, we're really, for our API calls, we actually got an award, Dev Portal award a few months ago, really was for the internal customers or our clients who are trying to enable their digital contexts and using our APIs, for example, account balance, requisition to understand. So it's more of a capability right now.
Pieces of Wells are using this gateway internally, and it's a small step then to expose it.
Exactly.
It's right. Wells competing with Plaid versus Wells taking on, let's say, Rails Bank. today. Okay.
Yeah, and Kevin, I think that second part is a question that Wells and others are going to have to answer for themselves, like Cap One and Wells. They're all building technology, and there's got to be, I imagine, an internal tension between, do we want to own the brand, or do we want to own the, and own the customer? Or are we okay being a provider to other services? And I'm curious how that debate is playing out, Joe, as you guys have it internally.
Like all food fights, it switches back and forth, but I would say—
Ask Joe in 12 months, I think is a short answer.
That's exactly right. Yeah.
Differing points of view.
Yeah, exactly.
Thank you. Amy or Brandon, any key innovations that your organizations are working on that you'd like to share?
I can go. So one is, I had mentioned around buy now, pay later. There's a big effort that we have around really enabling all of our 3 billion credentials to be used in that type of offering as well. So working with issuers, processors, merchants from an acceptance standpoint in terms of how this network can enable access for individuals to be able to have that type of offering at the point of sale. The other thing that we're spending a lot of time on, that's probably not surprising, is crypto. So crypto in terms of not thinking of crypto versus our network, but more around, we have a strategy to be a network of networks. Crypto is becoming increasingly interesting and from a global basis. Crypto still needs a way to be converted into an acceptance mechanism. So if you have, crypto and you want to pay it, you may not be able to, buy a cup of coffee with it. So, having a Visa card with a certain, crypto company that is converting that into an acceptance method that can be used to use as real money. So there's a lot of work and a full team actively working through those use cases and thinking about the use cases of the future. And as you mentioned earlier, my role is global. And so the way that plays out is really different based on, being in the US versus like El Salvador, where, they're looking at Bitcoin acceptance in different ways.
Amy, I think, Visa's strategy of a Visa credential in every crypto wallet, at least to me, is fairly clear, and that, merchants don't accept a lot of tokens today, but 65 million merchants accept Visa. So the wallet makes it, through that partnership with Visa and the network, easy to redeem. If we probe down on buy now, pay later, for the benefit of any potential merchants or people that know merchants in our audience, how will working with Visa in buy now, pay later be different than, say, going directly with Afterpay or Klarna?
Mm-hmm.
Maybe so just a few comments on, what are the advantages Visa hopes to bring to bear to buy now, pay later?
Yeah, I hate to overuse the word, but it's the network and the connections within the network. And so merchants are connected to processors that manage, their payment acceptance in many different ways. And we work with those processors in terms of enablement of buy now, pay later capabilities as well. So
greater reach,
greater
marketplace,
reach,
versus single balance
integration
sheet
with your existing system. Anybody who has tried to deliver new acceptance into the market, it's hard, right? Over 50 million merchants worldwide. You could say it's easy, even though there's still a lot of sell-in integration that needs to happen within the digital space. Even with the pandemic, there's a huge amount of acceptance that happens within the physical space. And so the ability for merchants to really be able to think both online and in-person acceptance, that is the network that we have enabled. And so innovating within that network actually helps merchants.
Okay, and leveraging then the investments, the infrastructure they already have that connects to VisaNet.
Yeah.
Okay. Brandon, tell us what MX is soon to launch.
Yeah, I think, actually this week we announced a partnership with Dawala that we're, leveraging their platform and API for some of our integrations relative to what we're doing around micro deposits. We also recently announced a partnership with Move, which is a new payments fintech company that is, working on the problem of moving money over a multitude of networks, and leveraging really the current, a new infrastructure that's being built around open banking to help make that happen. Very much like Joe alluded to, we're also heavily invested in the open banking world, and empowering and making that data connectable by both fintechs, banks, and consumers, but also the consent, the privacy, the traceability of where data is going and how it's being leveraged, and that consumers are consented for that, is a big part of what we're investing in recently. And I think, I'm certain there's going to be more conversation about it, particularly with the White House coming out with a statement on open banking. And it's definitely on the top of a lot of people's minds of how that data can be leveraged. And what we're continuing to invest in here at MX is, as that raw data comes in, how do we refine it and then build compositional elements on top of it? How do we know people's preferences? How do you begin to build even things like fraud models, identity models built around spending behaviors, and those types of things that can be built on top of those APIs? And that's a lot of what we are, investing in these days, and you'll continue to see from us over the next year. But we also very much kind of go to market with a two-channel methodology. One being kind of our direct to financial institution go-to-market arm, and the other being our partnership arm of doing partnerships with folks like Dawala and folks like Move. And we're going to continue to invest very heavily in partnerships because, as I said on the last question, as we get a more and more connected and API-driven world, no one company can offer the niche markets that are being born out there on a daily basis. And so I actually see a huge future for all of us in being able to partner on things that people do well. And I think that we see this manifest pretty strongly in the buy now, pay later space, as you see more and more niche players. Obviously Visa is a 50 million merchant player, and so very much a platform and network player. But as you see new startups, they're coming in niches and building their strength there, and it involves a lot of partnership and a lot of data and operability protocols that are necessary to make those things happen. And so we'll continue to see that from us.
And Brandon, if I thought about, maybe at the consumer level, I was digesting a press release, for example, about the partnership with Dawala and micro deposits. Is it yesterday that to verify my account, I had to wait for a micro deposit, go look it up, return to a website, and tell you whether that deposit was 3 cents or 10 cents? All right, today through your partnership, does that just automatically happen in the background? And my validation, my authentication with a new service provider, it's easier, it's faster. Benefit to that partner that leverages your new offering. More people do it because it's easier. Is that a fair way to think about how that works?
I think it's a somewhat of a fair assessment, but I think there are, very much like Joe was talking about, there are tiers of organizations, particularly in the banking space. If you look at maybe the top 20 banks, they're beginning to think about offering real-time APIs to allow things like the balance check or the identity check to happen. And so they're starting to offer these real-time APIs, but as soon as you start to get another couple hundred banks behind that, they don't have the technology infrastructure to start building those APIs yet. So they have to rely on, ecosystem providers or software providers that are doing that for them. And then you get to the long tail of banks, particularly here in the United States. The long tail may be micro deposits for the foreseeable future, but those top 20, you're going to be able to hit an API, a real-time API directly. And so really what we announced with Dawala was saying, we recognize this bifurcation in the industry. And when you select one of these top accounts, we can tell you right now, that's verified, that's the right account, you're good. But if you get into long tail, you don't have to tell us you want to do a micro deposit versus a real-time call. We're just going to route that for you because we know the optimal path for that to take for you to get the fastest verification of an account, depending on kind of where it falls in that spectrum of institutions.
Makes sense. So benefits for the developer in a sense, the person launching that new service. Great.
Yeah, absolutely.
Well, panelists, let's move ahead one question. Thank you all for sharing, the big projects and the new things that you are all rolling out. To shift gears a little bit, I'd love to hear a little bit about, what are some of the newer entrants or newer offerings you see others in the market, launching, or things they're doing that are either exciting and create opportunities for your own organization, or maybe they're the things that keep you up at night. They're the competitors or the barriers that you all have to navigate around in your day jobs.
Yeah, I can start. I get concerned anytime either new entrants or existing companies seek to remove data portability. And I'll give you one example. And the bigger they are, the more scary this is. So Apple's an example, right? They launched, a credit card, and they truly want you to only use the Apple app to view your credit card transactions and all of that. So they do not work well with people like MX and Plaid, and there's no data portability allowed. There's no data portability allowed except for on a monthly cadence where you can download a statement. Another example with Apple, for example, is when you buy all of your subscriptions with Apple, they occlude that data from your statements. So if you look at your statement, it just says Apple purchase. You can't see what subscriptions are from there. And the only way you can tell that is by going to a deeply embedded page within the iOS OS itself, or by scouring through your email receipts and hoping that you can find, the right corresponding email to it. And so, we see this type of stuff with, the same thing could happen with things like Cash App or Venmo, where you start paying with these alternative systems. And now when you open your statement, at least the data used to be there, but the data is not even getting to the statement anymore. And you're just seeing a transaction that says Venmo and things like that. And whereas even, the problem existed with checks, but banks quickly added the ability to just open up and see, okay, like, let me see the check image. And now the check image, like, I can at least see what this transaction is from the check image. That's not available. And so this is a trend that will hopefully reverse. I think the Biden administration is probably going to start putting out more and more regulations around this, because it's not a good trend for consumers.
I would definitely, dovetail with what Haroon's saying is, as there has been this increased conversation about privacy and consent, there's been less of a focus on some of that clarity and visibility. And there is, that hidden nature behind it, but there's no additional information behind it. Particularly, again, with the Biden administration, I think we're going to see the CFPB move to take action. I think there's going to be interpretations of Reg E and Reg F being in an electronic format. And I see more and more, interpretation of, I think, what the Biden administration is standing on is Dodd-Frank 1033 when it comes to the availability of that data. And, instead of a monthly download having a threshold at which that needs to be, provided via an API. And I do think we're going to see a big movement on that over the next year. But, to Haroon's point, it is also something that, that we think about quite a bit at MX in terms of the competitive pressures that are out there. There's that balance between people opening data and letting that data be available, and the fear that data could be used against them in one way or another. And when you have that type of openness versus fear, it often does take a regulatory action to determine when
balancing privacy and portability.
Yeah,
that's right.
And
right.
it's going to be, and it never, works 100% one way or the other. So it's always going to, you know, when they end up making that decision, it cuts both directions. And so I think there's a lot of anticipation for that out there, particularly with the administration stressing it.
And just to be clear, I mean, you know, if you think about a world where all users have real-time access to any of their financial transaction and other financial data, and a world where that doesn't exist, it's very hard to argue for that second world in my mind. If we actually care about people's financial health and we care about the ability for people to innovate to help people, you know, manage their finances better, it's very hard to imagine why we wouldn't want to live in that world where people have real-time access.
I'll just add, you know, from a futurist view, as we, you know, do work within our innovation team of signals that represent something new, you know, as a network, we're all about value exchange, helping the facilitation of value exchange. And we are starting to see these coffee shops, for example, popping up where there is no acceptance of cash or cards or anything else. It's acceptance of data. Like there's truly an understanding from a consumer perspective that I know my data is worth something and I'm willing to give you my data to get cups of coffee because the company is not really selling coffee. They're using your data to do other things. And so the consumer's deep understanding over, you know, a decade, you know, or two of real big digital transformation, people understand that value and that currency for themselves. So beyond just ownership, they're understanding the value related to it.
And Amy, that model you're describing, you know, am I correct to hear it's important that the consumer have consent? It's important that there's an exchange of value then, you know, in return for release of the data. And that's factoring into this portability versus privacy discussion.
Yeah, it's like right now there's a heavy focus on privacy, but then there's like, well, wait, where's value? Okay, where do I exchange, you know, sharing versus what I protect in order to get some type of exchange? It's valuable. Your data is valuable.
Yeah, I would say we, you know, absolutely agree that data is valuable. I think the other, you know, leg of the stool that's not mentioned there that is where a lot of things end up creating friction. And this is what some industry consortiums exist for, FData, FDX, some of those industry consortiums that are trying to figure out this problem, becomes liability. And so, yes, the data is valuable and you should be able to exchange it and it should be transparent. But what happens when it is leaked or corrupted? So
is your bank
where
or
does the
FI
liability fall? Yeah.
How do I prevent the liability and be a good custodian? Yeah.
And that's kind of the hidden conversation that, you know, consumers may not see, that conversation is behind the scenes and all these interactions of where does liability sit? Because when you figure out how liability can work within that network, then I think we're going to see a massive proliferation of that data. But liability is a central question because, you know, it impacts every single human that shares that data in one way or another.
And the fact that I provided consent may not release the bank from liability, that the bank or FI might have been a more sophisticated party to think about than I was as
absolutely
John or Jane Doe consumer. Panel, does this mean we all go long on the Brave browser where you know, I'm kind of monetizing explicitly my data?
You know, I don't know if it's worth enough. You know, I don't know how much it would be worth if we gave a toggle for users to say, hey, you can sell my financial transaction data. You know, we actually ran those numbers at one point to think like, could this be compelling for users? But today, I don't think it's valuable enough. And I don't think that the users truly understand the costs of selling that data. And so I don't think it's worthwhile to encourage that behavior today.
Yeah, this is where I would say I put the futurist lens over it because, you know, just like look at the years it took for Visa to make it interoperable, you know, liability, you know, identified network in order to allow all that exchange. You know, it's like over, you know, 50 years of doing that. So everything around like interoperability, liability, consumer experience. Like this is like a futurist, there's signals for it right now, but the evolution over the next decade, I think will be very interesting.
I would add my 2 cents with Amy. I also see that there are signals that are being developed and you can see them. And if you were kind of looking in one's crystal ball, you can actually paint a picture of what that could look like. I've read a lot of articles about the convergence of identity, i.e. the data things that we've been talking about. And identity is a big word, because identity could mean just your login credentials all the way to all your data, your transactions, your healthcare, et cetera. And I think Kevin, you're bringing up the custodianship, like who can own that, and the liability piece that Brendan also talked about. These are all things that in my mind still need to get solved and resolved through time and refinement and et cetera. But as an industry, there's no doubt, because of the interoperability through the traditional players like Visa, as well as the plaids and et cetera, as well as in healthcare, there's a lot of stuff going on in healthcare that is enabling EHR being one example. These are all going to converge somewhere, whether or not it's consolidated through one node, we don't know. But you can imagine if there is one node or a oligopoly of nodes, then there is a very powerful use case and value prop, both on the negative and positive, right? The positive would be convenience, interoperability for one's life, et cetera, but also there's a danger around leakage and all that kind of stuff that we just talked about. So I think that's something that we are also keeping track of and understanding the moving parts, though it is out in the future. That's definitely something that a lot of reports have been writing about.
Joe, I very much like that framing. From my perspective, historically, banks have been very thoughtful about being good stewards because of the liability about how they manage and hold your transaction data. Being a Visa alumni, I know Visa has thought very deeply. They've evolved a framework, how banks interoperate. They've thought about frameworks about how banks and other parties could share data, but it's always been from a place of consent driven and completely compliant with regulation like PSD2 and GDPR. I think you point out the fact that there are new business models and in some cases new entrants that seek maybe to monetize rather than be great stewards of that data. And that is sometimes a factor that I think financial markets don't fully think about in terms of the new horses and things that they back. And I think time will tell how perhaps more regulation plays out and either benefits or doesn't benefit the new approaches. Let's move on with another question. And Amy, I'm going to direct this one to you. Our other panelists are generally organizations focused on the United States or North America. On the other hand, you are the global point of view on our panel. Visa is truly a global organization. I think the majority of those 16,000 bank partners and 3.5 trillion cards are outside of North America. What are some of the recent innovations that you see happening? You mentioned Bitcoin in El Salvador, but what else do you see happening around the world that you think, wow, that is exciting, and potentially it's innovation that could find its way back to our shores? New features I might find in my account or my card.
Yeah, as you go around the globe, you realize how different things are from what your perhaps U.S. experiences, even different states within the U.S. So a couple of things that I have been finding very interesting is, for example, cash on delivery is still big in some countries. And so you start thinking about what happened with the pandemic, the growth in digital even happening within some of these countries, and the need to figure out, like, how do you handle cash on delivery in a different way that is more digitized? And so, surprise, there's a lot of solutions there around, creating solutions where cash can be given at certain merchants that then gets put within a credential, and those credentials can be used then online. So those are some things that we're seeing in some Latin America and some European countries. We're also seeing growth in what we refer to as tap to phone, or like the next million sellers. So we have, the technology now where you can create an acceptance point within your phone, and then someone can actually use a card and tapping against it, versus if you think of what you see within a traditional merchant. So you start thinking about all the mobile phones out there, they become acceptance points that don't require any additional hardware to be attached to it, and actually can just be used to enable that. So in Africa, that's becoming something that is adopted, as well as in some additional Latin America countries. And even with that too, like there isn't, the infrastructure of helping merchants set up both, online, but really in the physical world as well. So in some of our African markets, even some other AP markets, there's the creations of these, if you will, like merchant in a box, way to like quickly be able to set up and be able to accept cards. And for those in the US, you'd be like, well, why don't you just go to Shopify? But like, I'm talking about like in physical markets, where there's not a digital interaction, but the use of existing mobile phones to quickly help individuals set up. And then the last thing I'll say is in places like, Dubai, where very, very much driven by new technologies. And so facial recognition being used to drive payments, used to drive ways to tailor loyalty, personalization as you enter into a merchant store, as well as how you check out easily, have been some really interesting things that, again, signals around the world, and may not be directly applicable to us, but some interesting aspects as we think about continued growth and acceptance around the world.
Interesting. Well, facial recognition, perhaps having some analogs to open banking, where privacy versus potential, need to be perhaps appropriately balanced. Another question, and I'll direct this one. This will be the last question before we go to some questions submitted by the audience. We've talked for the most part today about features and capabilities that would be available to consumers, or the change in tastes for consumers. Small business is also a big part of the banking and payment landscape, not only in North America but globally. Are there things that you're seeing, or things that your own organizations, are launching or might launch soon to help provide capability and benefit to small business?
Yeah, I mean, I'll start with that. We have largely been focused on kind of the consumer retail customer within the financial segment, but a lot of the same types of tool chains and the same types of technologies can be applied to the small business world. And so one of the things that we are investing in at MX is taking that same type of tool chain around the connectivity and the refinement of that data and applying it to the small business space. I mean, there are massive opportunities there. We often see small business follow the consumer industry in different innovations that take place there. But over time, as there's been more and more regulation on the consumer side, the small business side has grown in the margin opportunity and in the business building opportunity. And I think we're going to see a continued expansion in the small business world of new businesses and new opportunities to be built in our industry. And we're certainly investing in that going into the future, starting with the data and then composing on top of that.
So Brandon, would this be, give me as a small business the ability to digitally link non-banking systems to the platform you operate for my bank to take friction out of my loan application?
Yeah, all of the above, of saying, if you look at some of the innovations in the consumer space, whereas say 10 years ago, in fact, I'm formerly of Experian, and so a lot of my career pre-MX was all about credit bureau data and how do you put it together. Worked on small business credit bureau data and putting that together and creating scores and validating them around that. And so how do you gather all that data? And instead of maybe manually pulling a credit bureau and manually sending it through your underwriting team, how do you pull that data together in this new connected world? How do you send it through new underwriting systems, that end up leveraging new technologies and new data sources to be able to make those decisions faster, and maybe even at a lower amount? Whereas, maybe 10 to 15 years ago, a profitable loan to a small business would be at about $250,000. Today,
Right.
a profitable loan to a small business could be at $10,000, because there's technology that make it efficient, scalable, and cost effective for both the small business and the institution that's part of underwriting that.
Joe, how is Wells Fargo, changing things around to make life easier for small businesses?
Yeah, I would build off what Brendan was saying, right? I think the interconnectedness of all the different ecosystems provide information and data that would be very attractive for small businesses. I think there's a point where I think a lot of, I would say, I can speak for the large institutions, we've really focused on commercial, corporate, and consumers. I think the small business is an area where we need to kind of really think through what the small business needs are, and really look at the higher order needs around liquidity, working capital, et cetera. And the things that Brendan was talking about, leveraging information, data, inside as well as outside of one's company, could really help the small business to gain insights of their operations, as well as underwriting, as well as increasing the velocity of money within each small business, would greatly improve. Because really, small businesses, as you and I know, Kevin, coming from Intuit, have different needs than just transactions. It goes beyond that. So for sure, there's efforts around those things from our perspective.
Kevin, if I could just jump in here with an additional thought is, the pandemic has been a design constraint for innovation. So I think the number is like north of 90% of small businesses had to pivot their business model because of the pandemic. And so it's just kind of surprising number to hear, but then kind of an obvious number once you hear it. And so, I've used this example of talking about, like, here in San Francisco, 4-Star Seafood, they were a wholesaler to restaurants. Well, the restaurants closed, so they quickly pivot to become a direct to consumer business of selling seafood. And then over the last year, they've also opened up a seafood bar restaurant. So it's like, to Joe and Brandon's point, like, well, what are they and what do they need? Difference between a wholesaler, direct to consumer, to, a restaurant bar type industry. Are they all three? Are they individuals? And how does that fit into, if you will, the kind of traditional segmentation that occurred before? And I think some of the evolution there is, how do you keep up and support those small businesses going forward?
Not only shifting for my in-person payments from, dip or swipe to tap, but then how do you support my remote commerce or non-in-person commerce payments, since that's a bigger part of my business.
And cash flow, yes, it's very interesting.
Okay, Haroon, is Truebill for small business on the horizon shortly?
It's no secret that SaaS is exploding as quickly as subscription economy is, and so this problem for small businesses, it may be an even bigger problem for small businesses to keep track of all of their SaaS subscriptions than it is for consumers. So all I'll say is it's something we're looking at.
So stay tuned. Will be the summary, maybe. Let's pivot now, and we'll take a couple questions that have been submitted by some of our audience. Thank you, Greg Sigel, for this question, and hopefully I'm at least in the right zip code to pronounce your name. So Greg is part of Docomo Digital. They are a fintech subsidiary of NTT Docomo, and they do direct carrier billing. And Greg indicates they see lots of alternative payment type activity outside North America, less in North America. Panelists, what are your thoughts? Will alternative payment types increase in popularity over the next 12 to 24 months in North America?
I think, my opinion at a very high level is yes. Like, we will always see, and I think if one thing I wish I could, maybe bet on in the market over time, is that experiences will get easier and more optionality will manifest. And so overall, I think we are going to see more alternative payment types. There already are ones being supported, like RTP and real-time payment networks that are coming to the United States. And you know, there are additional payment types that are necessarily being built even around, you know, things like crypto and all of the blockchain stuff that's out there. There's a huge amount of alternative that is coming about. I think, though, you know, to our earlier conversation, and you know, this is why Visa ends up being Visa, you know, maybe speaking directly to Amy, is the problems to figure out in this space, the jobs to be done are how do you handle liability? How do you handle risk? How do you handle a return? Because
where's that Visa-like framework for a chargeback or a return? And then how do you reach those 65 million different points of sale? That's right.
And if you can start solving those problems in like the little spaces, eventually it can compose to being as ubiquitous as, say, a card. But if you just think about it as a trivial change, then I think you're not thinking long enough. So is it coming? Yes. Will it come tomorrow? No. Does it take a huge amount of innovation to build a framework like that? Yes. And it's still expensive. And so I would tell every entrepreneur that I speak to, I say, don't let cost cutting be your reason for building an alternative payment rail, because cost cutting is probably not going to be your competitive advantage over time.
In terms of what else can you give either the consumer or the merchant?
Yeah.
Fair. And, you know, Zelle and PayPal's numbers would say that volume and Square Cash, it's increasing. Panelists, are the use cases changing? You know, historically, those have been A to A. Are we seeing more activity in terms of how merchants collect money or how you might pay a Spotify subscription, or early days? Joe, you guys sit on top of 70 million accounts. You know, are usage across those players, you know, gaining? Hard to know the different use cases, or what is Wells learning?
I think what Brendan said was well put, very articulate, and I totally agree with him in that in the short run, there are all these kind of jobs to be done that surrounds this transaction that will take time for this infrastructure to build. Though you have seen a lot of traction, again, depending on how we define alternative payments methodologies or types, but I've definitely seen traction and more especially the younger generation, exploring more for new adoption, as well as some kind of the PayPals of the world that are alternative, but kind of becoming more fixed, more traditional now, I guess.
More mainstream over time.
More mainstream, yeah, thank you. And I would say merchants. They are also changing their go-to-market and their offering to be more flexible, right? So PayPal Key is a great example, right, where will be a thing that they're trying to do to continue to increase that vector of reach. So I think there are going to be more, but overall, we're talking about complete ubiquity in the market like card. I don't think it's going to be in the short run.
Thanks. Well, panelists, we are actually slightly over time. So let me thank all of you for sharing your time, sharing your insights and your perspectives today. We very much appreciate it.
Thanks very much for having us.
Thank you.
Thank you, Kevin.
Thanks.
Okay, and thank you, Kevin, for hosting a fantastic panel webinar on regard to Take It to the Bank, the future of bank accounts and credit cards. Again, I'm Holly Rowland, the host of Cota Access, and we thank all of our attendees for their focus and time spent on this topic.
Thanks, everyone.